Hello all. Today we are going to start with the preparation of subsidiary books. Yesterday introduction for the subsidiary books was given to you. So in preparation of subsidiary books, first and foremost I would like to explain about purchase book. Okay, so purchase book is a book where all credit purchases are recorded, and we don't like you'll all have to remember that only credit purchases will be recorded, and also to remember no cash purchases will be recorded here, and purchases of fixed asset, or let us say purchase of assets, it could be fixed or it could be tangible or intangible assets, any kind of asset will not be recorded. Okay, these are the 3 points which you all have to note it down before we begin with preparing our subsidiary books. So first and foremost book, it's going to be purchase book, which I am going to explain, and in that only the credit purchases will be recorded, no cash purchases will be written, and also no purchases pertaining to the assets of the organization will be recorded. And a few terms which you all have to learn is invoice. Invoice means, dear students, the bill, the document which is supplied by the supplier. Now here the trader, he puts every detail, what is the quantity of items or which item we have bought, how much amount is to be paid, every detail. Just like when you go to a shopping mall and you buy any dress, you get a bill that comes as an invoice. So here when we are talking about purchase book, it is called as inward invoice. Inward means coming in, the bill which is coming into the organization. Okay, so in purchase book we write inward invoice, means the bill is, when you purchase you get a bill, but when you sell you give a bill. Okay, so that is why it is said that in sales book we write outward invoice number. See, if you see the bill which you have received from that shopping mall which I have been talking just now, if you see, there will be a specific number allotted to that bill. That is what we are talking about here, inward invoice number. Likewise in sales book we write outward, means the bill which is being given out, that number will be recorded. And also if you remember, when you go to the shopping mall and do some purchase, you will be given a bill, and also a copy of the bill will be kept by the vendor. Okay, so that they will have a proof of the transaction which is done in their mall, or let us say business or firm, or whatsoever kind of business organization it is. All right, so that is what one very important thing you all should know, that is about invoice. Then we have the other term, trade discount. This is generally the discount which is given in the trade, that is called as trade discount. Like I said, you went to a shopping mall, let us say you bought a nice dress which is of worth of 1000 rupees, and you are given a 10% discount on that. 10% discount on 1000 rupees, you will get 100 rupees. It means you are given a discount of 100 rupees. Now you are supposed to pay how much? After you take off the amount from the original amount payable, the leftover amount, that is called as the amount to be payable. Okay, so this is one important term which you will have to learn, is trade discount. This is the rebate which is given by the supplier on the catalog price. Like here the catalog price is 1000. This is known as trade discount. Okay, so that was about it. And if we speak about the format, on the top you will write purchase book. So every journal, every transaction related to purchase will be put up in this purchase book, and from here we will put it into purchase account. As you all know, only the credit purchases will be recorded, cash we will not record, and also the purchase of assets will not be recorded. First column, it is going to be of the date on which the purchase was done. Particulars, it is the description. of the purchase done. Then as I said, when we are doing purchase, we are getting a bill, an invoice is coming into the organization. So that is why there you will write inward invoice number. Okay, then we have ledger folio number, and after that we'll put amount in rupees. If it is in dollars, you'll put dollars here, or if it is in euros, whatsoever the currency we are dealing with, but maximum we deal in rupees, so I have put up rupees here. So this is how the format of purchase book is going to look like. Sales book also, it will be same, dear students. You'll have date, a heading will be sales book, date, particulars, outward invoice number, ledger folio number, and amount. Now here in the question, how it will be is, you'll be given different dates and the transaction relating to that date will be given. You have to choose it very carefully. If it is a credit purchase, you will record. If it is a cash purchase, you will not record it. If it is a purchase of asset also, you will not record. In case if there is any trade discount given, you will calculate the discount amount, you will delete it from the catalog price, and whatever actual amount being payable or receivable, only that amount will be recorded in the amount column. If you understood this all, it's very easy to do subsidiary book. Do not forget, it comes for 5 marks. Very easy if you understand to do it, and easily you can grab these 5 marks. Alright, so let us have a look at one of the illustrations. This is illustration 2 on page number 59. We are preparing purchase book from the following transactions. So the heading will be purchase book. There it goes, purchase book, and then you will put the format, that is date, particulars, inward invoice number, ledger folio number, and then we have amount recorded in rupees. Alright, there is our format ready. Let us see the first transaction. This all have happened during the year 2013. So we'll put 2000 on the top. It means all the transactions are pertaining to 2013. If you see carefully, this is how your question is going to look in subsidiary books. First we have Jan 2nd, goods bought from Rama. How much? 5,000. Okay, when we have a transaction like this, goods means purchases. Purchases are done from Rama. It means we still have to pay to Rama. Your company, or let us say our company, has brought goods worth rupees 5,000. So this is how you'll identify if the name of a person is given. It is a credit transaction. You'll put date, that is Jan 2nd. You'll just straight away write the name Rama. We are not given any invoice number, so let us take dummy as 1. Ledger folio number we don't write, and it was worth of 5,000. The amount is already put. Then see the next transaction. Jan 5th, purchased goods from Mohan. Whenever you see a name, it means it is a credit transaction. We are still payable to that particular person. How much worth? 10,000. 10,000 from Mohan we have purchased. 10,000, and we got a trade discount. If you see here under the transaction, within brackets it's given as trade discount 10%. Means we are actually supposed to pay Mohan how much? 10,000. But Mohan has given us a discount 10%, saying that you don't have to pay me this 10%, but remaining 90% you just pay me on these goods. So to calculate exactly how much we are supposed to pay to Mohan, we will calculate the discount. It means we are given a discount of 1,000 rupees. So we don't have to pay Mohan 1,000. If we don't have to pay Mohan 1,000, how much are we supposed to pay him? It is 9,000 amount. So this is why I wanted you all to learn about trade discount, because after deducting the discount amount, only the final amount which is actually being paid or payable, we will be recording that. So Mohan we will write. It has happened on Jan 5th. Jan 5th 9,000 amount. This is, let us imagine, this is our invoice 2. If you are given an invoice number, dear students, we'll write that. In case if it isn't given, you just go on numbering it. So we will write 9,000 after taking out the trade discount. Here itself within brackets you can mention 10,000 into 10% is equal to 1,000. Then in next line just mention 10,000 minus 1,000 is equal to 9,000. You can write it like this, or you can again show it in a separate working notes. How you have done it, not like you have you can show, but it has to be shown. After you're done with your sum, dear students, you'll have to show the working notes also. That I'll be coming very soon. Just to see the next transaction. On Jan 10th, bought 10 boxes of goods at the rate of rupees 600 from Ashok. So again, it is a credit entry. Name of the person is Ashok. We will write directly here Ashok. Now what is given here? We have bought 10 boxes, and what is the value of each box? 600. So one box is 600 means 10 boxes is how much? 10 into 600. That is value of 10 boxes is, we'll put the invoice number as 3, is value of 10 boxes is 6,000. That is 10 into 6,000. Now see the next entry. On Jan 15th, purchase of furniture from Murli. We will not record this entry because we have furniture here, and as earlier I have said, in subsidiary books we will not record any purchases which is done of assets. Furniture is an asset, that is why we won't be recording this entry. The next date, if you see what has happened, on Jan 20th, cash purchases were done. We will not record even cash purchases also, because in subsidiary books we do not record cash purchases. We record only credit purchases. No cash purchases are recorded, and also no purchase of assets are recorded in our subsidiary books. So this is your illustration, dear students. We don't have any more much than this. So we'll see what next to be done. Now we have recorded everything. On Jan 2nd we have done the purchase from Rama, 15th from Mohan, and 5th from Mohan, and 10th from Ashok. We don't have anything else to be written here. So what we'll do the total of all the amounts. 9 plus 5 is 14, 14 plus 6 is 20. So we have done a purchase of 20,000 during the year 2013 and during the month of Jan. Okay, that is how we come to know the clear, come to understand clearly, looking at this purchase book, during that month, that year, how much purchases were done in the company. So after you put the total amount opposite to it, you'll write total here. So this is how you'll show your subsidiary book. And working notes you have to show, like trade discount, what we have given, that will be there here. Just see the statement. Trade discount is deducted from purchases and net amount is only recorded. That is 10,000 minus 1,000, that is 9,000. Again, on 5th, how we got this amount, on 10th, 6,000 is again mentioned here. Jan 10th, 10 boxes were purchased at 600, that is 10 into 600 is equal to 6,000. Then the last two transactions we did not record. Why? We'll give the explanation. So this is the purpose of working notes. You have to write it. So that is how your subsidiary book actually goes. You'll write the book you are asked to prepare, and after that you have to show the working notes also. This will give a clear understanding to the person who is going through your work. So the last two transactions, why they were not recorded, have a look. Transaction dated on Jan 15th and Jan 20th are not to be recorded, as they are purchase of asset and cash purchase of goods respectively. You can put it in your own words, but then it should be clear to the reader to understand it. So this is how the subsidiary book, the first one you have learnt, dear students, purchase book, to be done. Thank you.